Hello traders, so in this session we're going to be looking at in-depth trade review of setups that you can see me share in the free Telegram community, and this is EURUSD. This is from the weekly time frame. We saw how price reacted at this weekly fair value gap, mitigated the weekly fair value gap, and then we had the bullish movement of price to the upside. So we must understand that the market condition is bearish, but then due to the bullish momentum we saw here and how price again pulled back, failing to take the sell side liquidity and giving us bullish momentum again to the upside, we began to frame to see the possibility of what bullish momentum to the upside into this weekly bearish fair value gap we can clearly see here. When we go to the lower time frame, we're going to see clearly that we are in a bearish market condition. So we look to the possibility of bullish momentum to the upside into this bearish weekly fair value gap. So what we can clearly see is, I've been pointing our attention to this open close price where price is mitigating and fell to the downside. We can see price again returning back to that particular open close price, which from the daily time frame we clearly saw that we have a daily rejection block at that particular open close price that we have here in the weekly time frame. So we can see reaction at the bullish fair value gap, and we saw bullish momentum. So clearly now, for the coming week, I told us to expect the possibility of bullishness because we're looking forward to see how price would take out this buy side liquidity. That was what I pointed out to us in the weekly forex focus video. That is why I emphasize that we should also watch the weekly forex focus video for better comprehension of the concepts. So what we can clearly see is the bullish momentum here. So I told us to anticipate the likelihood of continuous bullishness to take out the buy side liquidity. Since what we can see is price gave us bearishness but failed to take out this low, reacted at this rejection block and gave us bullishness to the upside. So let's get to the daily time frame. So here in the daily time frame, we can see that the market condition is bearish. Price printed this low points here, and we have the return of price to the upside. What price did was to take out the buy side liquidity that we have here, which we can just refer to as our inducement liquidity. So price took out the inducement liquidity, and clearly we can see now we have the break of structure here to the downside. And after the break of structure, we can clearly see that we have this internal liquidities. Now price gave us this pullback before we had the fall to the downside that broke structure. So we can now see again price gave this pullback, failing to take out this buy side, fell again to the downside. So we can see how price aimed to the upside. So you can see the rejection block zone I pointed out to us from the daily time frame, which is the open close price, and the weekly time frame. So we can see how price reacted and gave us the drop to the downside after taking this buy side liquidity. So what we can now see is the bullishness to the upside. So I told us to expect the likelihood of price taking out the buy side liquidity here, and we want to see the reaction of price at this rejection block. From the daily time frame, we can see that price gave this bearishness. We can see how price reacted at this daily bullish order block, though we had the movement went below that, but volume closed above. And now we can see bullish movement, price returned to the downside, failing to continue bearish to the downside. Let's get back to the weekly time frame, looking at it based on the concept of the CTR. What we can see here is we have the sweep of this weekly liquidity, this weekly candle sell side liquidity, and we can see volume close above that. And then the next we had bullishness. So we know that now price gave us a rejection block here, and we can see how price returned to it and gave bullishness again to the upside. So here in the daily time frame, we can clearly see that also sweep of sell side, sweep of the sell side, bullishness, price return, failing to take out the sell side, reacted at the bullish daily order block, gave the bullishness, price return, but then this failed to continue bearish. So clearly you know that what we have here is a bullish mitigation block. So we have a bullish mitigation block here in the daily time frame. And clearly here in the daily time frame, we can also see we have the sponsorship zone, this daily bullish fair value gap here in the daily time frame. So you can see how we're interpreting price, guys. You can see how clearly I look at the chart to interpret price. Price here is failing to drop to the downside to take out what's sell side liquidity. Why? Price is reacting at the weekly bullish fair value gap, and we're seeing bullish reaction. So clearly, but we know that the market condition is what? Bearish, but we are having reaction at a higher time frame sponsorship zone, which is the weekly bullish fair value gap. So we know clearly now price is being attracted to the buy side liquidity since we are seeing bullishness. So we have the rejection block, price return, reacted at the rejection block. We had the fall of price. Now we can see again, price return to the newly created rejection block here. So we would have to trade to see the reaction of price. If price violates the consequent encroachments of this newly created rejection block, then we know that price is going to aim bullish. We're going to have continuous bullishness to this rejection block, and in extension, the weekly bearish fair value gap resting above here. So what we can now see, we have the bullish mitigation, we have this fair value gap. So for us to continue bullish to the upside, looking at the buy side liquidity, which we're looking forward to see that the market will take out, that is the drawn liquidity due to the bullishness we're seeing. So clearly we have to wait for price to give us a discount movement so that we can take the bullish movement from a discount PD array to the upside. And clearly we can see price reacting at this rejection block. Then we know that price is attracted to the internal liquidity, which is this fair value gap, and in extension we have this mitigation block. So clearly, if we are going to take the bearishness, then we have to interpret the bearishness in the lower time frame and then look forward to how price drops into this daily bullish fair value gap, and in extension we have the mitigation block. Then we can begin to look at structural perspective from the daily bullish fair value gap to see if price is just going to react at this zone, and then we have the bullishness. But then you can also utilize the fifth zone, so trying to look at the pullback we are expecting, since this is the down close candle that sponsored this bullishness and we are having reaction at the rejection block. We want to look at how price may dip lower, so we know we can start from this low to this high point here. So we can see this is the high. So clearly here we have what? Price at equilibrium. Where we have our mitigation block is where we have what? The equilibrium price zone. And then below that, we have the discount price zone. So we can see that the bullish daily fair value gap we have here is not within the discount PD array. You want to buy at discount and then you want to sell at premium. So what we can do now is, since we've made this analysis and we've established what we really want to see from this higher time frame, the weekly time frame, and also the daily time frame. So what we can do next, I love to switch between time frames. I sometimes make use of the 8 hours, the 6 hour time frames, but then let's go to the 4 hour time frame. So what we can now see from the 4 hour time frame is this. Clearly what we can see is price is reacting at the rejection block we identify from the daily time frame. And what we can see here, we have the quasi-model, because we have the fall of price pushed to the upside, took out this high, we had this displacement that gave us this market structure shift. So basically this is what we look at. This is what I clearly wanted to show us about quasi-model. We have the push, the fall, price created a new high, but then we have price fell to the downside. So we could see price return, and then we have bearishness, because here we have what? The market structure shift here. Price took out this high point, but then we can see price fell and broke this low points. So we could see the possibility of price returning to mitigate this high point. So we could see that possibility of price returning to mitigate this high point, and then we have bearishness. So this is the quasi-model pattern. So what we can now see from the 4 hour time frame is we had that high, price gave the low, created the high. Clearly here is a breaker, and we can see how price returned into the breaker in confluence to the fair value gap zone, and then we had the bearishness to the downside. But then we can see the newly created high that was violated. We can see it's here because this is it, the push to the upside took out this high points, and now we had the bearishness. So we could see price, this high point, reclaim the price because price did not continue bullish. So we can see now that is where price is reacting at. So, and in confluence, you can see we have the bearish order block. Price here mitigated the breaker and fell, but we have the bearish order block unmitigated and a fair value gap left there. Now we can see price return deep more into the bearish order block in confluence to this high point. And now we can see the possibility of what bearishness to the downside. But from the 4-hour time frame, we do not really have a clear reason to want to execute a trade here based on this candle formation. So since we can see this is the daily bullish fair value gap, here in the 4-hour time frame, what we have is we have this unmitigated wick. We have this unmitigated wick. And we can see that the unmitigated wick is in confluence to the mitigation block zone we identify from the daily time frame. We can clearly see that here in the 4-hour time frame. So clearly you can see how I'm trying to show you guys when you're doing your top-down analysis, how you stick to the interpretation of this price delivery. So we can see here we have this unmitigated wick, which is in confluence to the daily mitigation block. And you can see we just have this bullish order block also. Here we have a fair value gap, which is within the daily bullish fair value gap. And we know that this is the zone where we have the discount PDRA, this candle wick. So here is the equilibrium, and below that we have the discounts. So this is not at the discount PDRA. So we could see price dip more lower. Since we can also see this is an order block here, a bullish order block created by this down close candle where we now had the bullishness to the upside. So we have what sell side liquidity resting here. So we could see price dip more lower and not really react at this particular bullish fair value gap. So we can do away with that. And then since we now see from the 4-hour, we redefine the zone, which also is in confluence to the discount PD array. So we can now go to the 1-hour time frame. So here in the 1-hour time frame, we can see price reacting at this bearish order block. This is the last up close candle that was created before the bearish movement to the downside. We can see price took out this high, price fell, give us what the market structure shift. So we can see price return to the breakout zone, give this reaction, but then we had the bearish order block that we clearly saw from the 4-hour time frame unmitigated, and price is now currently acting there. So from the 1-hour time frame, what we can see from the 1-hour time frame is that price gave us this down close candle, and now we can see this bullish candle to the upside, failing to give us bullishness to the upside, and now price drops to the downside. So clearly here we can see we have a market structure shift here. So meaning price is aiming for the sell side liquidity and the possibility of price dropping into the sponsorship zone. So it was in the 2-hour time frame that I identify a bullish order block, which is clearly this bullish order block that we have here. And you can see how that is in confluence to the mitigation block zone we identify from the daily time frame, which is within the equilibrium and the discount PD array. So we can see how price gave us this bullishness. Anyway, we had this return. This was sponsored by a news. And then we had this return to the downside and price gave us bullishness. So we could see price react at this zone because this was just a sharp movement to the downside. This was sponsored by news. And now we could see now price would return to the bullish order block here in the 2-hour time frame. And then we have what's bullish continuation to the upside. So let's get back to the 1-hour time frame. So we can see clearly from the 1-hour time frame, we had this bullishness, but the bullishness failed to continue bullish to the upside and price gave us bearish to the downside. Clearly we can see taking out this low point with volume closing below. So we know that price is reacting at a higher time frame zone here, a bearish higher time frame zone. And here is where we have the valid bullish sponsorship zone. So what we are to expect is how price is going to drop to the downside into the zone. So let's get to the 15-minute time frame. So you can see how I'm dropping between time frames. And clearly I sometimes use the session indicator. This is the Asia session, this is the London session, and here we have the New York session. Now what we can see from the 15-minute time frame, we had the pullback, price push, failed to take out this high. Price again fell to the downside. Here we have this pullback that also failed to continue bullish to take out this high. Price fell to the downside. So we have what? A market structure shift here. Or we could wait to see that the price would take out this low point. What we can see, we have the sweep of this low point. Volume did not close below it. So this is it. Now we can see the reaction. Now we have this low. Here we have this market structure shift. Or you could wait to see that the market would take out this low point. And then you can determine to see where would be the return of price to the sponsorship zone that price is likely to return to, and then you have what's the bearishness to the downside. So clearly what we can see here, this was the last up close candle that was printed before we had the bearishness to the downside here. So clearly if price is returning, we want to see how price return to this sponsorship zone, this bearish order block, and then we frame what bearish continuation to the downside. So you can see how I've been taking us through the journey of this time frames, right? So we can clearly see we've established the bias we are expecting from the weekly time frame. We clearly established what we are expecting to see. And now what we can see is, I told us that weeks also are sponsorship zones. What we can now see is we are seeing the possibility of price returning to the 50% of this candle week. Because we can see this gave us an indecision candle, and then what we had next was the bullishness. Being attracted to the buy side liquidity, we have this buy side liquidity from the weekly time frame, the weekly bearish fair value gap. Meaning if price is going to break through this rejection block, then we're looking forward to price trading to this high points here, this weekly bearish fair value gap. So let's check the daily time frame. So here in the daily time frame, we can see we also establish our expectations. So we can also see that this is the mitigation block where we identify the candle week in the 4-hour time frame. We can see how that is in confluence to this daily mitigation block, and this is within what the discount PDRA. So we can look at that. So we can see this is within what the discounts. We can see the equilibrium price. So price may just dip more into the discount, and then we have bullish push of price to the upside. And from the 2-hour time frame, I now clearly showed us that we have a bullish order block in confluence to that. We can see that. So I told us weeks are also sponsorship zone. We can see this long week. Price may dip to mitigate the mean threshold, and I think this is the mean threshold level of this week. So you could see price deep into that, and we have bullishness. So these are a setup I've shared, and we're trying to have a review in that so that you can clearly see how these things deliver. So from the 1-hour time frame, we pointed out that we have a market structure shift here. Price is aiming for the sell side, sell side. Why are we regarding this? Price is reacting at the higher time frame, bearish sponsorship zone. So let's go to the 15-minute time frame. So here in the 15-minute time frame, you can see how we redefine. We have this bearish order block that we're looking forward to. So let's play price to see. So it means that now we can see that now in the 15-minute time frame, we have what? A market structure shift here established. We have our market structure shift established from the 15-minute time frame. So clearly now we have more established confluence, more established reason to consider the possibility of what the bearishness, to take out the sell side and the sell side liquidity resting here down to the bullish sponsorship zone. So let's play price to see. So basically now I can take a short position from this sponsorship zone here and have my stop loss above this high points here. And clearly, I'll be targeting the first sell side liquidity. So I'll be targeting to see how price takes out this low point, or you could leave your take profit at the bullish order block here. So clearly let's log this, and this is already 1:5 risk reward. So meaning we've marked out this sponsorship zone, and we can see that we have our buy side liquidity that price is likely to take out, the inducement liquidity. So let's play price to see what happens. So we can see now, what we can now see is we are in the Asia session. We are in the Asia session. So let's play price to see, meaning the new day has begun. So let's play price to see what happens. Now, what we can see is price traded into the sponsorship zone we marked out, into this bearish order block during the Asia session. So we could see the possibility of this movement taking out the Asia session high and then giving us bearishness. So London may print what? A high, and then gives us what? Bearishness. But there are times that we could see that what the Asia session may just give us the high of the day. So what we'll be expecting in London session is to see how the London session will sponsor the movement that will break the Asia session low, giving us a valid break of structure. So let's look at that. Let's see how this delivers. So what we can now see here is how price respected the zone, give us this bullishness, failing to take out this high, and we had this bearishness to the downside. And what we can see price created here is a fair value gap. Let's mark that out, guys. So we can see we have a fair value gap here. So clearly now we could see the possibility of price returning into this fair value gap, especially if price is reacting to another sponsorship zone here. So we have demand supply created when price is giving us a movement. But basically when you are in a bearish market condition, you want to pay attention to the bearish order block, which is the supply. So but here now we have a demand zone. So we could see price give us a pullback into the fair value gap, and then we have bearish continuation to the downside. So clearly you can decide to set another position here, another short position. You can decide to set it within the fair value gap or at the low of the fair value gap. Let's just set it inside the fair value gap. And now your stop loss can be above this bearish order block that sponsored the displacement to the downside. Here you have an inducement, a buy side liquidity. So we have this zone marked out, so we can target the low again that we're looking forward to see how price takes out what? The sell side liquidity. So let's log this, guys. So let's play price to see what clearly happened. So we can see, all right. So we can see how price returned to the upside. Let's see if the market activated this trade. Okay, we missed this entry. All right, so that was missed with just a few pips. So we can now see, but we are in this particular position. So should in case you're seeing the Asia session running into your sponsorship zone, and you could wait to see if the Asia session is going to create a displacement that may make you consider to take that entry. And clearly here, price gave us that displacement and created what? A market structure shift. We have what? The inducement liquidity. Price pullback, took out the inducement liquidity because price reacted at this demand zone. And then we have what's return, and price fell to the downside. So let's do it with this, since price did not activate this particular trade. So clearly now what we can see is we're expecting to see more possibility of what? Bearishness to the downside. So since this took out liquidity, clearly you can see that. Let me show us. So we can see how this took out this high point, right? So price took out liquidity here, give us a displacement that took out this low point. Let's mark that out. Price took out this low point. So we know, and price gave us this fair value gap here. So we know these are the up close candle before the bearish movement to the downside. You're looking forward to see price would take out the Asia session low points. So basically now we have a displacement that led to this break of structure. What we have is a fair value gap. So let's also point out the fair value gap. Yes, the fair value gap we have here. So we could look forward to a short position within the mean threshold, or you could set it at the low of the fair value gap, since these are the up close candle before the bearishness. Now we can set our stop loss above here. This took out what? Buy side liquidity. It has taken out liquidity. So, and we'll be targeting what? The low point here. And this position is 1 to 6. Here we have what? 1 to 5. This is 1 to 6. So let's play price to see how that delivers to the downside. Okay, so we can see price return and activated us, and this is during, now we have the London session beginning here now, because the London session starts by 2 a.m. New York time zone through 5 a.m. New York time zone. And what we can see is price gave us the push into our zone during the London session. The London session always starts by 2 a.m. New York time zone through 5 a.m. New York time zone. And we can see that this candle that returned back into the zone was created at the 2 a.m. New York time zone. And now we can see price give us bearishness to the downside. So we are in the London session, and now the London session is sponsoring what? Bearish movement to the downside. Here is the Asia session to the high. Asia session gave us the bullish movement, giving us the Asia session low and the Asia session high points, creating the high of the day. Now price would aim for the Asia session low points to take out the low points. So, you know, I've taught this session trading, so you can check the course. I think one of the videos, just check, they're all titled, so you can look into that. So we can now see how price returned to mitigate the fair value gap, and we can see the displacement of price here to the downside. So we are expecting how price is going to give us what? Bearishness. Price reacted at a higher time frame sponsorship zone, leading to this market structure shift. We're looking at price taking out the sell side liquidity, since we know we've identified a higher time frame bullish sponsorship zone. So let's play price to see how price continue delivering to the downside. Here we can see price now took out the Asia session low. So we have what's the break of that what low points. So let's play price to see. Yeah, now what we can see clearly now here is price reacting at this down close candle before the bullish movement, and at that zone we have an inversion fair value gap. So an inversion fair value gap should also take out what? Liquidity. And what we can see is that this sponsored the movements that took out this low point, this sell side liquidity. You can also see took out this other low here. So took out what? Sell side liquidity. So this is an inversion fair value gap, and here we can clearly see how price is reacting at that inversion fair value gap. So we can see price reacted, giving us a return. Here we have the buying movement before the sell movement to the downside. So clearly that is an institutional order flow. Now this is the most recent down close candle within this bullish movement, and we have this unmitigated wick here. And I think let's look at that. We have a fair value gap here. We have a fair value gap here. So you see, this is how I just settled down to look at price. So we have this fair value gap here. So we could see price deep into the zone. So clearly I could set another short position here. The stop loss can be above this week high. That is an unmitigated wick. So I can set the stop loss there. And then also I'll be targeting the low. So this is how you just follow price. This is how you just what? Follow price. So you can see this is another position we're setting in this particular trade setup. So we can see price here reacting at the inversion fair value gap, giving us bullishness. This is the institutional order flow, the buy movement before the sell movement that validated the break of this Asia low points. So let's play price to see. Okay. Now what we can see is in preparation for the New York session, we can see price gave a return to the upside. So now we can see how price returned into the zone, into this unmitigated wick. In confluence, there is a fair value gap there. And now we can see price fell to the downside. And what price led here is a change in state of delivery, because price gave us a bullish order block, and now we can see price traded below the bullish order block, leading to a change in state of delivery. And what we can see we have there is a fair value gap, also a bearish fair value gap within that zone there. We can see we have this bearish fair value gap. So we could have another short position here at this fair value gap. Stop loss above here, above the high. Can have the stop loss above the high there. And then we also still target the sell side liquidity. So I'm just showing you guys how you need to be looking at the charts. These are things that you see me share them live on the Telegram community as price is moving in real time. So let's play price to see what happens. Awesome. So we can see now price return to activate that. Price activated that, and now we are seeing the bearishness to the downside. So again, here we can see that price gave us this bullish order block. Now volume have closed below that bullish order block, and we have what the break of this low point. So we can see we have what the break of this low point here. So clearly now, if price is gonna dip more lower, what we have here, we have this fair value gap here. We have this open close price. We have this up close candle before the bearishness. So we have this open close price here, which could serve as a level for entry. And then we have our stop loss above this high. So that is not going to be a good risk to reward ratio. And what we can just see is there is an inversion fair value gap here from this here to this zone. So we can consider the mean threshold there. So let's see how this will play out. The mean threshold of the inversion fair value gap and the stop loss above it, because if that is going to respect price, then price should not break above the mean threshold. So we trade what to the downside. So let's look up this price to see. So let's play price to see what happens. Okay. So we can see this price went above, mitigating the volume of this up close candle before the bearish movement. So this is a trade that we took a loss in then. So based on what we're currently looking at now, so this is a trade we took a loss because we can see price went, but then we have profitable positions running this position, and also this position. So you can see we have 4 profitable position moving. We missed one, which was this movement here. Now we're taking a losing trade here. So clearly now we can see that this is a New York session. Let's look for the 8:30 open price. So this is the 8:30 candle. So basically this is the open price during the 8:30, and now price have traded above. So since we are looking at bearishness, then price should trade above the 8:30 open price during the New York session to give us a premium array, and then we have what's the bearishness to the downside. So price traded above to mitigate this bearish order block. So let's play price to see. Okay, price is just consolidating there. Wow, that's a poor movement. That's a poor movement. So now what we can see is the end of this particular day. Now we are in a new day because we can clearly see this is what the Asia session, the beginning of what the Asia session in a new day. And now we can see price just give this consolidation. Price pushed to the downside, and then we have what took out this previous day low points. We have the break of this low points. So clearly now we can see that the Asia session took out all of this buy side's liquidity. All of this buy side liquidity. So we could see that the Asia session now has created the high of the day. Since that seeked this buy side liquidity, meaning we have accumulation, here's the manipulation, and now we're having what? Distribution to the downside. So clearly in this regard, if we're going to continue bearish here, what we have here is we have the breakout block here, because this led to the graph of liquidity to the upside. We can clearly see that price took out liquidity to the upside. We can see this movement took out buy side liquidity, fell. So that's a bearish breakout block. So clearly now it means that in confluence the bearish breakout block, we have this open close price. So you can decide to take an entry here, your stop loss above here, and then we'll still target this low points. Or you could just look at taking your entry at the fair value gap we have here. This is the rejection block, took out liquidity, displacement to the downside. So we could have a short position here at the mean threshold of this sponsorship zone. So we have entry here, stop loss can be above here. We can look towards our low. So we have that low point there. And this is also 1 to 5 risk reward. So let's play price to see how price delivers to the downside. Okay, so let's see. Wow, price already traded down to the target area. So we may not see price return to this sponsorship zone. So this is just what I want to show us, guys. So, we are expecting bullishness, but then we saw price reacting at a higher time frame bearish market condition. So basically this concept is trying to show you a counter trading perspective. But you know that the main structural perspective we had from the daily time frame is that we are in a bearish market condition. But then we identified bullish momentum, and then we're looking forward to bullish movement. Now, this is basically how you want to be framing your entries. This is how you also want to be utilizing the knowledge you have. So I don't want this video to be so lengthy. So we're going to further look into this particular asset class with more examples so that you can clearly have an understanding of the concepts. So cheers and God bless you all.